When it comes to taxes for capital gains in Germany, Anlage KAP is a standard basic form. However, there is also the KAP-INV form, which is relevant if you have income from investment funds that were not subject to domestic tax deductions. For example, if you live in Germany and make capital gains abroad from mutual fund investments, you are liable to be taxed in Germany for this income. However, the foreign financial institution won't pay taxes to the German government. Therefore, you as a German resident have to declare these gains in your German tax return and pay the taxes. If that's the case with you, and you have such gains from fund investments, then KAP-INV is the form for you. Keep in mind that this is only about income that was not subject to domestic withholding tax. So let's get started. If you're new here, my name is Srijit, and on this channel, we talk everything about wealth and happiness, and sometimes boring tax forms. Now let's open Elster, which is a free online software from the tax office, and see how to fill out the form. The form KAP-INV is an attachment to the basic income tax declaration form or the HOP4 If you want to know how to fill the HOP4 you can watch this video. Once you log into Elster and start a tax declaration, you can additionally include the necessary forms by going to the bottom left corner and clicking on Anlagen hinzufügen and then selecting the necessary form. And in this case, the Anlage KAP-INV form. Now this form is divided into 4 sections. Not all of them may be relevant to you, but still we will go through each one in detail. When it comes to capital gains, you have to distinguish between income from distributions and those from sales and transfers. Now distributions are regular income that you receive, such as dividends from your fund investments. This could also include cash distributions, the reinvestment of earnings, and any non-cash distributions. All such income from funds that were not subject to domestic tax deduction should be declared in section 1. You need to enter this information here, broken down by type of fund. The main difference between these funds is the proportion of equity or stocks in the fund. Now, why is this important? Because a portion of the income from these funds is not taxed, and the level of tax exemption depends on the share of equity in this fund. Equity funds are those that invest more than 50% of the assets in stocks and receive a 30% tax exemption. Mixed funds invest at least 25% of their assets in stocks and receive a 50% tax exemption. And real estate funds, they invest more than 50% of their assets in real estate and real estate companies and get a 60% tax exemption. And foreign real estate funds focus on foreign real estate and companies with an 80% tax exemption. And the last category includes all other type of funds such as special funds, umbrella funds, and alternative investment funds. These exemptions will be calculated by your tax office. So you have to enter the values here before applying the partial exemption. Now, when we move to section 2, this is about gains and losses from the sale or transfer of funds that were not subject to domestic tax deductions. Again, like the previous sections, you need to break down the information based on the type of fund. And for each type of fund, 3 values must be entered. The profit or loss from the sale of such assets in lines 14, 17, 20, 23 and 26. And in lines 15, 18, 21, 24 and 27, enter the part of it that came from the sale of Bestand Geschützte Altanteile or protected old shares. These are funds that were acquired before January 1, 2009 and held in private assets. And the investor receives an allowance of 100,000 euros for the sale of such funds. And here only enter the capital gains from sales. The partial exemption amount will be automatically considered by your tax office based on the type of fund. And in the third field, enter profits or losses that came from nicht Bestand Geschützte Altanteile or not protected old shares. These are old shares that were purchased after December 31, 2008 but before 1st January 2018. And here you have to enter the actual profits or losses after considering a fictitious sale. I will explain. Because of a change in the taxation rules that took place at the beginning of 2018, those shares that were purchased before 1st January 2018 is considered sold as of December 31, 2017 and reacquired as of January 1, 2018. So here in the third field, you have to enter the change in value of the investment units between the actual sale and the fictitious sale that happened on December 31, 2017. I will give you an example to make it more clear. Suppose you purchased funds in the year 2010 for 10,000 euros. The fictitious sale price as of December 31, 2017 is 12,000 euros. And when you actually sold the funds in 2023, the value was 15,000 euros. So the interim profit from your fictitious sale in 2017 is 12,000 euros minus 10,000 euros, which is 2,000 euros. And the gain from your actual sale is 15,000 euros minus 12,000 euros, which is 3,000 euros. So you have to report the value of 3,000 euros in lines 16, 19, 22, 25 or 28 based on the type of fund. And the gains from the fictitious sale that happened in 2017 of such non-protected old funds have to be entered in line 56. I will come to that later. And for all protected funds, the interim profit calculated as of December 31, 2017 must also be taxed at the time of the actual sale. This must be entered separately in field 29. If you bought investment funds on January 2, 2018 or later, you do not need to report anything in line 29. Now let's move on to page 4 where it gets really interesting. Here you have to enter separately the sale details for every investment fund that was not subject to domestic withholding tax. If you have investment with different purchase dates, make a separate entry for each acquisition date. And here you can use the FIFO principle or first in, first out to figure out which funds were sold first. But keep in mind that it is also considered a sale even if the funds were changed from one to another, such as from liquid to equity. As a first step, you have to provide details of the fund, such as its ISIN number or identification number, the fund designation and the fund type, such as equity, mixed, real estate or others. So in line 47, enter the number of shares sold. And in line 48, enter the Verkaufspreis price or the price at which the sale was done. This is the gross amount before any deductions for costs, taxes or other expenses related to the sale. Line 51 is about all the total money you spent related to the purchase of your investment funds. This includes the purchase price of the asset itself as well as any additional costs directly related to acquiring the asset, such as brokerage fees, transaction costs, etc. Now here again you have to distinguish between the investment funds bought before January 1, 2018 and those bought after that. And for the former case, you must use the last redemption price set in 2017 multiplied by the number of shares bought as a fictitious acquisition cost as of January 1, 2018. And for investment funds bought after December 31, 2017, enter the actual purchase price here. In both cases, add any other related expenses such as brokerage fees and transaction costs. In line 52, provide similar costs associated with the sale of the asset. Now, line 53 is about fora pauschale or advance flat rate. I will talk a little bit about this since this is relevant from tax year 2023. This was a system which was introduced in 2018 as an advance tax on unrealized capital gains to close certain tax loopholes and simplify the process. This means there is a tax you have to pay for the increase in your fund value, even if you haven't sold your funds. And the advance flat rate itself is not the tax that you have to pay. Instead, it is only the value on which the tax is levied. And how much would this be largely depends on the base interest rate announced by the Ministry of Finance at the beginning of every year. And since this base rate has been 0 or negative in the recent years, the advance flat rate has also been 0. But for 2023, the base interest rate is set to 2.55%. What this means is that now there is an advance flat rate of around 180 euros per 10,000 euros of an equity ETF. You pay 25% of the advance flat rate as withholding tax plus the solidarity surcharge and, if applicable, the surge tax. And this results in a maximum tax of 36 euros per 10,000 euros for 2023. It's also possible that the actual tax paid is lower than this. If the fund's profit was lower than the advance flat rate, you only have to pay tax on that amount. This is also the case if you have distributions from your funds that you already pay taxes on. These are reduced from the advance flat rate before the taxes are calculated. And when you sell your investments, the advance flat rate is subtracted from it to avoid double taxation. So this advance tax rate has to be provided in line 53. Line 54 will be automatically filled based on your other inputs. And field 55 is specifically for reporting gains from the disposal of protected old shares, or bestandsgeschützte Altanteile, that corresponds to the values in line 54. Again, these are typically investment shares purchased before January 1, 2009 and sold before January 1, 2018. Similarly, field 56 is for reporting gains from the sale of funds purchased after December 31, 2008 and sold before January 1, 2018. This was just one form. There is also the Anlage KAP and the Anlage KAP form, which you have to fill out if they apply to you. You can find those videos on the channel as well as other forms. So make sure to check them out. and do subscribe to the channel. Tax topics can be complicated in Germany, and I always felt that there is a real shortage of information and guidance in English. I suffered when I started doing the taxes, and that was one of the main reasons why I started creating tax videos on YouTube. Even though YouTube is a great platform for me to share what I know, it has its limitations. I kind of feel there is a real need to build a community outside of YouTube to discuss German finance topics, including taxes, where people like you and me can come together to collectively share the experiences. And on this platform, I will also be uploading exclusive videos of how I do tax declarations every year for my personal income, capital income, and business income. If you are interested in being part of this community, then click the link in the description below to join the waitlist. For now, I want to limit it to a few people so as to keep it manageable. So do register earlier if you want to be a part of it. I will send you updates as they come. So that's it. Again, I'm not a tax advisor, and this is not professional tax advice. Still, I hope you got some value from this video. Until I see you with another one, have a wonderful rest of the day and adios.